we're talking about the fact that today marks the 5th anniversary of interest rates being at an all-time historic low, 0.5%. Now, this is brilliant news for homeowners and their mortgage payments. Not such great news for savers or those relying on a fixed income. So what have interest rates done to you over the last 5 years? If you're a borrower, how's it affected your life? But if you're a saver, has it actually decimated your savings? Well, Simon Rose is from the campaign group Save Our Savers. Morning, Simon.
Good morning.
So what has it done to savers?
Oh, well, it's been another disaster if you're a saver, particularly somebody perhaps trying to boost their income in retirement. Somebody who might have done without for many years, put a bit of money by in the hope that the income from your savings is going to help. Well, of course, as we know, interest rates have declined massively in the last few years. We've calculated that savers, I mean, there are something like 1.1 trillion pounds in cash savings in the banks and building societies, that through a combination of lower rates and the effects of inflation, they've lost about 326 billion pounds, which is effectively a transfer of wealth from those who've saved to those who are borrowers. Really just encouraging us to take on even more debt.
But it's manifestly unfair, isn't it? Because, I'm a saver. I always have been a saver. And I look at my savings now, and it's not very much, to be honest with you, but it's just been eroded. We have been sacrificed on the altar of incompetence.
I don't know if there's an audio equivalent of looking in the mirror, but yeah, I find myself saying that all the time. Yes, it's appallingly unfair. And indeed, when in opposition, Cameron and Osborne were saying exactly that. Why are savers being bled dry in order to fund borrowing? The problem is we have a debt habit, an addiction in this country, which I'm sad to say the Bank of England seems perfectly keen to continue going. They're just hoping if we just take on a bit more debt, maybe the economy will achieve some sort of sustained takeoff. But even if we try not to be so selfish, and even if we don't say, well, look, it's just unfair, why is this happening? For the wider economy, if you look beyond whether you're a mortgage holder or you're a saver, it's actually been quite bad news keeping it at this level for so long. It's affected the cost of living crisis because inflation was way above target for most of the last 5 years. It's depressed the cost of the pound, so imports have been more expensive. Well, that's affected everybody. It's made house prices go up, so it's more difficult for people to get onto the housing ladder. And indeed, it's pushed rents up. It's meant people can't afford to save for their deposits. And it's also affected pensions. Companies have had to boost their pension fund because of the effects of QE, so they can't invest in their business. And if you're retiring and you have to buy an annuity which gives you your income for the rest of your life, which can't be changed, you'll find your income is about half what it was 5 years ago. So the effects are manifest all the way around the economy. And I suspect that if the Bank of England had had any idea 5 years ago that this would be the position we've gone in now, they would have tried to find a different policy.
But isn't the culture that we live in based on consumerism? If we don't go out and buy things in shops, then those people will be out of work. The people who make the products will be out of work. The wholesalers will be out of work. So the whole thing is this sort of house of cards based on consumerism. Now, if people actually aren't earning the money to consume, then you've got to get them consuming somehow. So you lend them the money at very low rates. So to keep things going.
That is an excellent summation of how the UK economy is working. Yeah, well, I mean, it's 2/3 dependent upon consumer spending. Well, that's fine for people to take on a little bit of debt, but to get to the position where we are now so heavily dependent has ramifications. We know interest rates will go up eventually. That's going to cause problems to people who are too heavily in debt, even at these current rates. But ultimately, the real problem we have, and the only way you can get an economy to grow, is through investment, by making companies more profitable. Now, of course, companies have had terrible trouble getting money out of the banks. They've just sat on the money the Bank of England created. In order to get investment going in this country, what do you need? You need savings, because if you consume everything you produce as a country, you save nothing. There is no money for investment. That difference between what we consume and what we save is investment. And unless we encourage savings, we may get a boost in consumer spending, but people will get into debt. They'll get into terrible trouble. And the more heavily in debt you are, the less you can spend.
Right, but so what, a lot of people listening to this programme at the moment will possibly because of the time of day and the very nature of things, it'll be a lot of retired people will be listening to us at the moment. They will have relied on their savings, however big or small their savings are, to get through their retirement. They have, if I can use a vulgar expression, they have been royally stuffed, haven't they?
Yes, that's a polite way of putting it, frankly. They have, and unfortunately, we've got to shout about as much as possible. Come and join us at Save Our Savers. We will make a fuss, but at the same time, don't let them grind you down. There is a difference between having your money in an account with 0.1%, which many people have because they haven't bothered to look at it, or having it in a higher account, which is 1.5. It does make a difference. Have a look at other things like peer-to-peer lending, though bear in mind you'll get a bigger rate, but you're less well protected.
But that's going to change in April, isn't it?
It is. It's going to be protected then. That, of course, will make it more difficult for new companies to come in, but at least gives you some form of protection. If the banks won't do their job and lend out the money, and they've been pushed so hard over the last few years, but what we think about banks, then let's try and find ways to circumvent them. We've got a nation that wants to borrow money at good rates. We've got a 1.1 trillion of cash savings where we want to get a better rate. There have to be ways of bringing these people together, and if that means bypassing the bank and sticking our fingers up at them, well, I'm certainly happy to do so.
Simon, good to speak to you. Thank you very much indeed. Simon Rose from the campaign group Save Our Savers. Well, some might say, well, Dave, that wasn't a very balanced interview, was it? Surely you should be putting the other side. Well, quite frankly, I can't see the other side. Can you see the other side? Because so many people who have saved hard throughout their lives are now having problems. Now, let's have a look at some of the...